Here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we take a look at the charts, what has the underlying's been doing, and take a look at the options. Give us some perspective on what the options are pricing in for potential movement in the stocks we want to take a look at. Now we're getting into the tail end of this year, last two trading sessions. So let's jump right in and want to take a look at some bullish activity we saw today. And we're going to start with an ETF that probably most of you haven't even looked at. It's the Ultra Short Dow 30 Pro Shares. The ticker symbol is DXD. It's trading around $14.12. It's up about 0.1% today. I saw some very interesting activity that got me thinking, are people hedging? Haven't seen a lot of VIX activity, haven't seen a lot of puts being purchased. Yes, the put-call ratios are starting to increase, which means more puts are being bought than calls, but still, it's still under that magical number of 1. So there's still more calls to puts overall being purchased. So I saw this interesting trade where 2,500 contracts of the February 15 calls traded in DXD. Now, what does that mean? Well, first of all, it means that someone thinks that the Dow Jones 30 could get bearish. If the Dow Jones starts to go down, this actual ETF will go up in price. So it moves inversely to the Dow Jones 30. So they're buying these calls. They think that there's the potential for the underlying to go up, DXD, and the Dow to go down. They're paying 35 cents, so that's the max risk. That's $35 per contract. So they did that 2,500 times. Now, the number of contracts that traded before today were 80. So there wasn't a lot of interest. There wasn't a lot of bears out there, and rightfully so. The market has been on unbelievable tear to the upside. But we are getting into the tail end of the year. People might be trimming or maybe hedging going into the new year because they haven't trimmed anything from their portfolio. The implied volatility is my gauge that I use to get a perception of what is expected for potential moves. If it's really high, like 70, 80, 90%, that's telling you that the options marketplace is pricing in potential for some violent moves in the underlying. In this case, DXD, it has an implied volatility rank of 30%. So it's on the lower end of that volatility rank curve. With that being said, that means that these options are relatively inexpensive. Now, the options over the next 22 days are pricing in a potential range of either up 71 cents or down 71 cents in DXD. So decent range in a $14 stock. The critical areas that you're going to want to watch if DXD is going to continue to go to the upside, because right now it's been just tailing down, is 1430, 1556, and 1717. If 1430 gets broached and it starts moving to the upside past there, watch 1556 very closely. That could really ramp up not only the trend in this particular underlying, but it could really be signaling that there's some bearish activity brewing in the general market, specifically with the Dow Jones 30. The next name that I want to start talking about is Blackstone Group. Heard it being discussed by some pundits why it's not moving to the upside like some of its large cap financial brethren. Financials have been doing unbelievably well since the rate hike in early December. Blackstone Group, ticker symbol BX, is trading at $27. It's down about 0.8% today. 2,840 contracts of the January 28 calls traded for approximately 37 cents. Now, the open interest before today was at 16,000, so it's been trading a lot. There's been a lot of interest. The stock has been lagging its large cap brethren in the financial sector. The implied volatility rank is on the lower end at 35%. And you're seeing that the options over the next 22 days are pricing in the potential for BX to be either up $1.53 or down $1.53 over that 22-day period. That means that they're pricing in the potential for Blackstone to be at 28 and some change, or as low as 25 and some change, 25 and a half, 26. Critical levels that you're going to want to watch on Blackstone Group. The first one is going to be the 28.19 level. If Blackstone Group gets above 28.19, that means that the trend in the underlying stock in the short term is moving to the upside. That's that 20-day moving average for those of you that are wondering at home. 26.35 is going to be the support level that I'm going to want Blackstone to hold if, in fact, we're going to see some bullish activity. For this strategist, they're going to need the stock to be over $28.37 to be break even at expiration. Now, the company is due to report in February, but that's after the expiration of these particular options. So the catalyst is going to have to be from the general market and the financial sector. And you could see some bargain hunting here. Those stocks that have been lagging this upside could be the new darlings of the new year. Now, some bearish activity that I did see was in retail. Specifically, if you look at the Spider Retail ETF XRT, it's down about 0.2% today at 44.25. I saw 3,300 of the March $43 puts trade for roughly around $1.20. Now, the open interest was sufficient. It had 5,700 contracts already traded before today, but implied volatility rank was high. That's telling me at 54%, there's a heightened expectation of potential violent moves between now and basically the next 30 days. The options in January, which are expiring in 22 days, are pricing in the potential for XRT to be either up $1.88 or down $1.88. That means that we're talking about this stock either being at 46 or as low as 42. Critical levels that you're going to want to watch if retail is going to start getting some legs. And this is big box retail, right? We've been hearing some mixed data coming out after this holiday sales season. 46.16. That's going to be a critical level that if the bulls are going to take hold here, if we're going to get momentum to the upside and the trend has shifted to a bullish stance, 46.16 is going to be a big number to be getting through. 44.73 is going to be a number that we're going to want to see broached soon if institutions are going to start to bite, especially as we get the sales numbers coming in early January. And then 44 needs to be held. That's where the long-term support is. Now, again, watch December same stores details coming out around January 5th, so next week. Looks like there has been a large surge in online purchases, but traditional retailers have been struggling as far as the foot traffic. Speaking of a bricks and mortar retailer, let's take a look at Sears. Sears has been beat up for most of the year and is now bouncing back today. The stock's up about 75 cents and around $8.93, so it's up about 9% today. Now, an interesting trade I saw today was 12,000 of the March 17 puts started trading this morning at around 45 cents, and it's traded as high as 70 cents today. So quite a few contracts traded. Now, open interest was at 5,900 contracts traded. So there was some interest there, but boy, 12,000. The implied volatility rank is off the charts. It's at 99%. They're expecting big violent moves. This is an $8 stock. Anytime the stock moves like 75 cents or $1, you're talking about basically somewhere between 7 and 10% move in the stock. That's a big move. As a matter of fact, they're pricing over the next 22 days that this stock, Sears, could be up as much as 373 or down as much as 373. That gives you a range of basically between $12 and $5, which is the strike price of the options that traded. Now, critical levels that you're going to want to watch for in Sears. It's been in a bearish trend for quite a long time. 1073 on the upside, 1154 on the upside, and 1337. 1073 broached through there. You could see some upside and a trend change in the short term. Now, the company is moving right now to the upside because of the fact that they did secure a letter of credit, which is now an understandable catalyst. That allows the fact that they will have a credit facility available to them to up to $200 million. Plus the fact they've done an incredible job of cutting some bricks and mortar out. In other words, they've been closing stores. Their earnings are expected in February, which would fall within this March expiration cycle. So let's keep an eye on here. This could be either a hedge or it could be a strategist that's going out and selling out of the money puts. So if Sears does pull back, they're going to buy the stock, but they're going to buy the stock. If they're selling it on average at 50 cents, they're going to be picking up the stock at $4.50. So very interesting activity. They're also going to be speaking at the Mobile World Congress on February 27th. So it'd be very interesting to see if they're going to develop a new mobile strategy to get on that e-commerce bit. All right, folks, that's it for Tech Talk right now here at MarketStream.live. Stay tuned for more shows coming up, and always take a look at the videos that we have archived at MarketStream.live. Thanks, folks, and have a great trading day.